All right. Welcome back, guys. Welcome back to the channel. Man, I've had so many technical difficulties lately. It's really frustrating me. I'm not a really technical person. I'm just a trader and I know my way around a computer, but lately it's been terrible. I dropped my mic, $200 mic, drop it, broke it, wasn't recording. Webcam's always broken for some reason. I don't understand. But anyway, so today's video, how often is it that you get into a trade and you get stopped out only to watch the market move in your direction? That's like the trader's number one like bane of existence, right? Like we hate it when that happens because you had it right, you just did not. You either got a bad entry or the market actually hunted your stop because it knew where you would be placing it, and you got stopped out. So that cannot be avoided. I want you guys to understand that that can't be avoided. Okay, you are going to lose. Okay, trading is it's a long term probability game. Okay, it's just a game. It's a long term, over the long run. If you have a trading system that you can follow, that you believe in, that you have the confidence to take trades when your system gives you your signal, however you trade. Um, in the long run, if you have an edge on the market and you're consistent, you're going to make money. Okay. So I want you guys to know I'm shifting this channel away from specific, um, like technical analysis, things like that. You are not losing money. If you're losing money right now, you're not losing money or you're not making money because of technical analysis. There are hundreds, thousands of videos on YouTube about TA. Okay, there's hundreds, thousands of different strategies, and you can make money pretty much doing anything. I think we've all established that. It's your risk management that holds you back, guys. It's your risk management, and it's your trade management in particular, because that is where your risk management comes from. So I'm going to give you a simple technique that I've been, I won't say perfecting, but I have definitely been improving as I've gotten better at trading. And it's just to remove the noise from the environment. Now, this is not going to be anything groundbreaking, um, but I haven't seen it in other videos, okay? It is going to use ATR, but not in the way that you probably think. So bear with me here and let's get into it. All right. So think of it this way. Have you ever been on a interstate highway, whatever, you're driving and the speed limit say 60, but traffic's moving at about 75. Everyone's trying to get home, everyone's trying. If you go to 75, you're going over the speed limit. You're about 15 miles over the speed limit. But if everyone's going over the speed limit, is 60 really the speed limit right now? No, because what police officer is going to pull you over if everyone in traffic is moving 15 miles above the speed limit? Okay, the traffic can handle it right now. If anything, if you're going 60 and holding things up, he'll probably skirt you to the side of the road and let traffic continue. I've seen it in YouTube videos and things. But I want you to think of the speed limit on the interstate or the highway. I want you to think of that as the volatility in the market. Now, we as traders need volatility. Okay, we live on volatility. It's our bloodline. If the markets don't move, we can't make money. All right, understand that. So, volatility is often associated, though, with losing money. It's often associated with losing your account, because when the volatility heats up, when the speed of the market increases, you are more susceptible to getting stopped out. You're more susceptible to getting stop hunted. Okay. And that scares a lot of people. But you have to be able to ebb and flow with the volatility of the market. So I'm going to show you what I've been doing to be able to do that lately. Let's bring up Paint here. We're going to need it on the side for notes real quick. Damn it. Nope, not that one. You can get out of there. No. All right, let's make that stay on top there. Okay, so this is volatility here. We're going to use ATR. We're going to go to the daily chart of whatever you're trading. Okay, go to the daily chart. Let's go back on the daily chart 10 days. Let's go back 14 days. Because this is a 14 daily chart right here. Okay, so we're going to go here and we're going to start a replay right here. Okay. I don't know if it cut it there on this 2-minute chart. Let's see. Let's see if it did it the right way I wanted to do it. If I'm here, am I at the edge? Where am I? Okay, so it didn't cut it on this chart for some reason. So let's put a line there. And let's find that line on this chart. What day is this? The 3rd of October? Come back here to the 3rd of October. All right, so that's where we want this replay to start on this one. Yes. We want the replay to start here, though, on this one, because that's where we're going to be. Okay. So for me, excuse me. Okay, so for me, I want to know what the average true range or the daily movement of the daily chart. I want to know what does the daily move, what is it possible for the market to do? So if I had my largest position on and the market moved its full potential, what's the most I could lose on average in a day? So I'm going to go back here. We're going to target this area here. It's saying that ATR is 103. Well, right here on this day, it's 97.52. Okay, so we're going to put that in here. 97. Let's just round it up to 898. Okay, so 98 ATR over the last 14 days. All right, so that's all we're going to use that for right now. Okay, we're now going to come over to this chart right here. So we know ATR on average for the last 14 days is 98. Okay, now we want to know that we know that it's rarely going to move. It's going to move a little bit above this and a little bit below this. Okay, because ATR is going to be the average. So you might have a value of, it might move 110 one day and then another day it might move 80. Okay, or it might move 70 and it might move 120. Okay, but they're just going to be averages because when you average these together, you're going to get about 98. All right. Any combination that's going to add up to 196. Any combination of numbers, any combination of two numbers that'll add up to this, you're going to end up with 98. All right, so we got 98 ATR. Now I want to find out what is the most volatile time of the day. Okay, and that's a no-brainer. We know it's the open. Okay, the open is the most volatile time of day because that's when all the orders are firing at the market. Okay, so I want to go back now and I want to get from this ATR, I want to get 10 ATRs. I want to get 10 average opening ranges, open moves to see what the average ATR should be for the open if I'm going to trade the open. So in order to do that, I got to go back. I'm on a 2-minute chart. And I just want the average move before the market decides to do something else. Okay, that's all I'm looking for right now. Okay, my watch is going crazy. Hold on, let me turn that off. All right, so I'm looking for the average move before the market decides to do something else. All right, so I'm just going to go back 10 days. When we get 10 numbers here, we're going to average them together. So opening range of this, okay, opening range of this, we counting this as the opening range? I mean, we could. It's 11 bars. It's 11 bars. Okay, but I'd most likely count this. And you can use your discretion. It's 11 or 26. That's a big move. But let's count 11. Let's keep it consistent. Let's count 11. So 11 is the first day. Okay. We're going to go to the next day. So when this market opened, it drove down. an average of what before it stopped? It drove down an average of 41 before it stopped. 41. Let's do it this way. We just do, there we go. 41. Okay, we're going to come back here to the 28th. The market opened on the 28th here and drove down an average of 19 before it decided to do something different. 19. Okay, then it came here on the 27th, and before it decided to do anything different, it went 28 points. Okay, we'll go 28 points. Okay, let's go here. Before the market did anything else here, it ran up 23 point. Well, let's get all the way at the low here. It opened here, okay, and then ran up 25 points. So we'll do 25. Then we'll start another row here. Okay, market opens on the 23rd, and before it decided to do anything else, 24 points. Okay. Here on the 22nd, the market opened up, pushed up before it decided to do anything else, pushed up 11 points, and then sold off. Okay. Here, volatile day. This market opened here and sold down to here, so we're not counting that. So from here to here, 13 points. Okay. From here to here, before it decided to really retrace, 17 points. And then we're going to do one more, which is going to be the 19th. And this is a pretty big one, it looks like. So before this market decided to do anything else, 34 points. See that? There was some selling here, but we're going to count this as the first real retracement right here. So we got 34 points. All right, so now we have these numbers here. Let's bring up a calculator. And we're going to add them together, and we're going to average them. We got 10 numbers. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So 11 plus 41, 19, 28, 25, 24, 1, 1, 1, 3, 1, 7, 3, 4. Okay, all those numbers are good. Divided by 10. So we average this by 10. Okay, it comes out to 22.3. Let's just round it down and say 22. Okay, so the average opening range for the past 10 days has been 22 points. Okay, so this tells you guys, if you want to play the open, you have to have a position that can withstand a 22-point loss on average, okay, before you can invalidate the trade. Because anything less than this on the open, you're going to be stopped out, okay? So you cannot put a random, oh, I'm only going to risk 4 points. I'm only going to risk. If you're going to do that, trade at night, okay? Trade when the volatility is the lowest. Don't go into the morning session with a average true range that you, or with a stop loss that's just going to be knocked out due to natural movements in the market, okay? So this is how you would kind of frame that. So now we know ATR for the day is 98. ATR average on the open is 22. Okay, so what do we know about the open right now? Well, if we take this 22 and divide it by 98, we can get an idea. Okay, 22 divided by 98 is 22%. Okay, so on the open, we know that the market moves on average 22% of its daily move on the open. Okay. What's the most that it moved in your sample size? 34. 34 divided by 22. I'm sorry, 34 divided by 98. Okay, you got 34%. Okay, 34%. The most it moved was 34%. And the lowest number on here, what we got? 11. So 11 divided by 98. Oh, 11 divided by 98, 11%. Okay, 11%. Okay, so from this now, we know that on average we need a 22-point stop. The most stop we would most likely need is going to be 34 points. And the least stop we could get away with is 11 points. Now tell me, how does this help you knowing this? Let me tell you how I think about it. If the market opens up and it moves more than the most average range of the last 10 days, there's either going to be a strong, really strong trend day, okay? Because they're really pumping, they're really moving more of this range, okay? Um, or there's going to be a really strong reversal. So you can expect either or. If it moves the least, that's indecision. Okay? Because if it typically moves 22% and it moves 11%, you're only getting half of the average movement of the market. So that means that side, if the side's bullish and they're able to move at 11%, but on a typical day, they push up 22%, this side has less conviction on this day than they did on this day. Okay. So I would not trust this move as much as I would trust this move. Meaning, if this move were to pull back, I'd want to be a buyer somewhere around the halfway point. If this move were to pull back, I would be cautious about buying because it could reverse, because there's not as much conviction in this move, this 11% move, as this move right here, this 22-point move. But if this thing opens up and runs the most that it can run, 34 points, okay? If it opens up and runs 34 points, okay, I'm definitely interested in buying this pullback, okay? Because I don't expect it to push down very deep. I don't even expect it to get to 50% of this move. So I'm interested in buying. Hopefully I can get in here. But when it pushes past this, past the 40% mark, basically, I'm looking for a reverse, because not only did they show tremendous strength on the way up, okay, and you would expect there, if you see a market going straight up off the open and you can't get into it, you're waiting for a pullback, and it just keeps going up, going up, going up, going up, going up, going up. The longer you wait for a pullback, the more people are waiting for a pullback. Okay. So if the market's going up, 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 and you can't seem to find a way to get in, and you're like, oh my God, as soon as it pulls back, I want to buy. Everyone's thinking that. Okay, so that means there's buyers under almost every single bar in this pullback. So when price does start to pull back, if these buyers can't support the price after they've been waiting just as long as you to buy, then they're probably not going to buy. So you could probably give up on this and realize that the other side is stronger, because this opened up with the most momentum that it ever did. It did 34% of the day's move when it opened. Okay. And they would not support the price on the way up, on the way back down. All right. So this was kind of a reversal day. Okay. If it opens up on average and it's moving in one direction before it pulls back, like I said here, that's probably a buyable pullback. Okay. But you know all of this now. You know what the average move is. You know what most of the move is. You know the biggest move, and you know what the least average move is. Very powerful for you to know all of that. All right, so let's take this information to this chart that we just gathered, okay? And because we know that the average position move in this stock is 22 points, that's what we're going to set our stop to, okay? So whatever position sizing you have, and this is the micro that we're on right now, every point is $5. So we set 22-point stops. If we stopped out, we'd be $110 out, okay? So let's take this and let it be our guide here. Let's do this. Zoom in over here. Just take this right here so that we don't have to keep referencing it. Let's put it on the chart. Okay, put it over here on the chart somewhere because we're going to work forward, so we don't really care about this past price action. So let's show you that you can use any strategy that you feel comfortable with, okay? But you have to control your risk. So let's go to this line here, okay? Let's go to this line here, and we're going to start on the 3rd, and we're going to use MACD. I'm going to use MACD on a 2-minute chart. I can't get that any closer, can I? All right, let's just reset. Put it here. Paste right here. Doesn't need to be too big. Okay, so we're going to use MACD on a 2-minute chart, and we're just going to follow MACD signals, okay? So MACD looks like it's crossing up as the day is starting. Okay, let's see if it continues to cross up. Okay, so we gap up on MACD. We've crossed up. Okay, let's judge the strength of this move here. Okay, so before the market did anything else, it moved. We can get rid of this now. Before it did anything else, it moved about 24 points. That's the average that it's been moving, okay? So this is an average type of day right here, okay? So what do we say? If it pulls back about halfway, we could probably sell this pullback, right? Okay? Let's see how that plays out. Well, we're just looking at MACD right now, okay? Okay, so we pulled up, got faked out there, bull trap or bear trap. Okay, so we pulled over there. We got this cross going on here. We have pushed up since the open. Oh, that was cool. How did I do that? I just did something I didn't know I could do. Okay, anyway. So we pushed up from this open here, and we've covered 53 points. Oh, that's not right. We've covered 57 points of the daily range. Okay, if the daily range is 98 and we've covered 57 points, we've covered more than 50% of this daily range. Okay, but the trend is up, so we should only be looking for buy signals. Okay, but we're going to take the sell signal. We're going to take the sell signal just to see how, if we just kept our risk management right, what we could do. So let's go short position. It just crossed. Let's put our stop 22 points above. Okay, and we've already moved 50% of the daily range. Okay, so let's shoot for 25 points below that. Let's shoot for half of the daily range being taken out with this signal. Okay, we just crossed over again. We're going to cancel this trade right here, and we're going to go long. We're just trading from cross to cross, okay? We're going to go long right here, and we're going to put our stop 22 points below. And we're going to shoot for, how much of the daily range have we gotten out of this so far? 63 points. So we got another 30 points. Let's shoot for a 1-to-1. We can't expect it to do too much more. It's already ran pretty much its entire range for the day, which is 98 points. All right. So let's take this trade here on the long side, 22-point stop. Okay, so that is a trade that we win. Okay, so that's one win right here for 22 points. All right, we're just going to come back here. Where's the paint at? I'm going to come over here. We're going to expand this. Keep track of our wins over here. Okay, so 22 points. Move that off to the side. Okay, so now let's look at the average range of this market for the day so far. Okay. We've moved about 85 points. Now, let me ask you something. If a market typically moves 98 points in a day and you're at 82 points by 1 o'clock, okay? If you're at 82 points by 1 o'clock, should you be expecting more out of this market? Should you be expecting to get one of these or one of these out of this market? Oh, we lost this. We got to put this in minus 1175. And the answer to that is no. You shouldn't. You should not be expecting to get the rest of that movement out of the market. Minus. Oh, it's in red. We're gonna know it's minus 1175. Okay. So the answer is no. You should not be expecting to get any more movement out of this market, or not a lot of movement. Okay, because it's moved pretty much its daily range now. All right. So we're gonna wait now. The next day's coming up. We're gonna try not to take any more trades, but we've won one. We've lost one just by following a MACD cross. Okay, so we see this double, triple topping up here. A little bit of a head and shoulder. No, not really. But definitely equal tops or lower highs. Okay, now into the close of the day, we finally have our high put in, and that high is 92 points. It's about 6 points off the average. Okay, let's go into the next day now. So the next day opens. We're still looking at the MACD down here because that's what we're trading. That's our strategy. The day opens right here. Okay, we want to look at this opening range now. It looks like it gapped up. Okay, so that's telling us to look for longs because it gapped up. Okay, it's telling us to look for longs. So this gap here, guys, is already really bullish. Okay, so we don't have to know what the sentiment of the market. We don't have to guess what the sentiment of the market was this morning because it gapped up. All right, so it's bullish. So we're looking for bullish MACD signals, and we got one here yesterday at the close, and then it's just expanded here. This may be a little too late to buy right here. Okay, but once again, we want to look for that opening range. Okay, it moves about 22 points on average at the open. So we're all way past the average move of the open. Okay, it's moving actually the most. It's moving the most that it moves. It's moving 30 points, and it moves the most at 34 points. Okay, so we know this is a very strong bullish day. So what did we just say? If it opens up and it's very strong, it moves the most that it usually moves on average on the open. When it pulls back, you should encounter buyers at damn near every level on the way down. And if they don't appear, expect a reversal because they just gave it all they had at the open, and the sellers came back stronger than they anticipated and was able to push it back down. So we're not looking for a retracement of this that's too deep. Okay, we're looking for a retracement that's probably around the 50%. Okay, but let's play it out. Let's see what we get. Pull this up here. So I want to be a buyer around here. I want to be a buyer at this structure level here. MACD's giving us a sell signal. We're disregarding it because we have this gap. Okay. We have this gap and we have a really strong move post gap. Okay. We have a really strong post gap move, 52 points. Okay. So we're not looking to sell this at all. We're looking to buy it, but we'll wait for a buy signal or we'll wait for a 50% retracement. We might not get one. We might just get another buy signal. I like it to be below this histogram if I'm trading a MACD. Okay, so it doesn't look like we're going to get the price that we want. It's giving us a buy signal. It's giving us another sell signal. Remember now, we don't want this to pull back too much past this line because that's going to show us weakness. It's going to show us that they came up here. Why aren't you working? My line white or something? Oh, it must be white. It is white. Look at that. I'm like just pressing it and pressing it. Nothing's popping up. Okay. So we don't want it to pull back too far past this line. Maybe a little bit lower. Okay. Okay. So this is the reversal that I'm looking for. Let's wait till MACD crosses. Okay. So we have a cross of the MACD. Let's put in a stop with an average stop of $22. So long position here. $22 stop. How much of the daily range have we covered so far? Covered about 34 points, so about a third of the daily range. So I'm comfortable with going for a 1.5 on this if this is to continue bullish. Okay. Comfortable with going for the other third of the daily range. We know we have resistance up here. Okay. We know that we have a gap down here, and all gaps do not get filled the same day. It's like maybe 48% of them do. Um, so you don't have to, gaps always get filled. That's what retail goes into the day thinking. So they're shorting this from the open, probably losing a lot of money because they're thinking it's going to come and fill this gap and then take off. That's not always true. Okay. It sometimes will, it sometimes won't. You have to be reading price action. It's not a rule. Okay. But these averages are helping us out here. So let's get in here. Let's place our stop below here. And let's see if we can get a 1.5 out of this. We know we have resistance up here. It tried 1, 2, 3 times, but we're getting a signal for buying at below the MACD at the 50% of this push up, this very strong push up. Okay, we found some buyers. Okay, and we're taking out this low here, which should have acted as resistance. Okay, so we got a lot of reasons why this trade should work. Doesn't mean it will, but we got a few reasons why it should. All right, so let's play it out. Oh, the day's ending. The day's getting ready to end. So let's go ahead. Push, 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 push. Okay, we're gonna get out at the end of the day. Okay, but we captured another. If we just held it, we captured another 21 points. Okay, so we're gonna add 21 points to that. Okay, no losses. No whammies, no whammies. Okay. At most, we were in profit about 27 points, but we got out when the market closed. Okay. So let's continue to watch. Let's drag this on over. Let's continue to watch this MACD, wait for buy and sell signals, and let's see what the market wants to do on this opening range here. So it opens here, gaps down now. Okay. So we saw a lot of strength. We saw a lot of strength on this open right here. See how it gapped up? But then it gaps down. And what does it do? It gaps down into the gap. It gaps down into the gap that we created yesterday. Okay? Let's see what this opening move gives us. This is giving us a sell signal. Gap down, very strong gap. It's basically taken out the entire range of yesterday. So it's gapped down pretty good. So let's see what this gap tells us. Okay, so before the market thought of doing anything else, it ran up about 18 points. 18 points is a little less than our average. Okay. So if you know that the average is 22 points and you see that this is gapping down, and the first opportunity that the bulls get to buy, right here, they can only push the price up by 18 points. So less than average. Okay. Less than average. So the bulls are not particularly strong this day. Okay. So we can expect this to reverse. So we have a sell signal right here on the MACD. I would expect to take a sell signal. Okay. I would expect to take a sell signal when this breaks structure to the downside. Okay. So let's see what we got here. Let's fast forward it. Coming down. Now it might want to fill this gap. Let's see. Coming down. Going back up. Still got a sell signal on this MACD. We're not in a trade yet. Okay, right here. right here. It looks like it's retesting also, but we're going to get in short right here. And we're going to set our average stop at 22 points because we're still in the open. Okay. The beauty of this, guys, is that if you have an average move of the most volatile time of day, any time of day below that, any other time of day, it's going to work for that average range. It should work if you're right on the trade. Okay. It should work because there's no time more volatile than this today. So as we move out, even the close is not as volatile as the open. It may look like it, but it's not. So when you have all of this happening during the day, and you have all of this activity, and you're setting your stop for that range, any other range that you set during the day should hold, okay? Because this is the most volatile time of the day. So let's go here. Let's see how much of the range we've covered here so far. And so we can try to pick out a profit target. Right now we're about 29, so we're about 1/3 of the range again. So once again, I'm comfortable with this gap below. I'm comfortable trying to get 1.5 out of this range. Okay, let's mark 1 so that we just know where we are. And then let's try to shoot for 1.5. R to R. Okay, so 22-point stop. We have a sell signal, another one. It was coming back up and then it was confirmed. Only thing I don't like about this is we could have taken this sell signal here at the top, right here, but it was still climbing. But we could have taken the sell signal, but it could have wanted to come and fill this gap and fall away. We don't know. All right, but we know now that we have a strong gap here, and it does coincide with a level that was support yesterday. So now it's flipped its role and became resistance. All right. So this move here down, still a sell signal. Okay. It might pull up halfway. We could try to get a better entry here, but we're just going to try to get in here when it broke this structure. Let's try to get in right here, actually. Let's have it retest structure and come back up to see if it'll let us in. Okay, we're coming into a buy signal right now. Okay, but it is on the bottom of this structure point here. But we've just got a sell signal right here, and it's below the MACD. But this day is still bearish. Okay, it's still bearish, so I'm expecting it to come up here and pull back away. Okay, I would say right here it got us in this order. Okay, and while we do have a buy signal here, it came about halfway into this gap right here, and it hasn't filled it yet. I'm still looking for this to break down. Look at the move down. Look at the move down here. Well, let's look at the move up again. 19 points. Now look at the move down from here to here. 35 points. 37 points. What side is stronger to you right now? Clearly the bearish side. Okay? You have all of this energy here that you have to take out. Let's say we're in it right here. Okay? And you know that there is above here, there's resistance. Okay? So let's see what we get out of it. Let's just play it out now. We have a buy signal, but I want to go short. I want to ignore the buy signal here, and I want to go short based on other things. Okay, so we got taken out of here. So the right thing to do here would have been to take the buy signal and take it down here. Okay, so we lost 21 points on this. Let's go. So we just undid that last trade. Okay. All right, let's continue to go here. Okay, we've come up to a point of resistance, and we have gotten a sell signal from MACD about right here. Okay, so we're going to put this here. And what part of the daily range are we in? 42, 41. So 41. So we're in the middle of the daily range. If this is a range day, this would be perfect because we're right in the middle of this range right here. Okay, but let's set our stop for 22. Let's take this sell signal down. Just hit resistance. Couldn't get as high as the last resistance. Okay, couldn't get as high as this. Let's see what we get out of this. Let's just play it out. Okay, we got stopped out again. Shit. Okay, this day's over now. This day's over right here. Okay, so we're at minus 22 now. We're in the red based on this strategy here. Okay, next day, same thing. Don't get discouraged. You're going to lose trades, okay? You're going to lose trades. Just manage your risk. Let's check out this move. We gap down. Little bit of a bearish bias since we gap down, okay? We want to see how much this moves before it wants to do anything else. And we're going to be looking for signals down here. Okay, so it moved up. It moved up 18 points, a little bit less than the average 22 points that it's been moving. And we have a sell signal right here. Another one. It's below that, but we're going to take it. Let's take it here. Take the sell signal, 22-point stop. And we're taking the sell signal here. Let's play it out. Immediately taken out. And before the end of the day, we had this. Now check this out here. This would be the most frustrating thing right here. What we could have done to mitigate this, right here, is we could have waited for this range to continue to develop. We could have waited for this range to move up 32 points and then shorted here. But we did take the signal here. Well, we could have taken this signal right here. We would have got a worse entry. We would have had it got in right here, but it would have never came back up to take us out. It would have been the same entry. It just would have been at a different time. So we took this entry here, took us out. We could have took this entry here, same spot, and it would not have taken us out. So we've lost again. Minus 22 points. Okay, we got what, 4? We got 7, 6. We're going to do 4 more trades. See if we can get to even on this or at a profit. All right, next day. Let's continue to go here. Okay, next day. Where's the price? Okay, big gap down this day. Big gap down this day. Got a lot of gappers trading right now. So we're already bullish on this or bearish on this because of the gap down. Let's see how far it moves before we get a reverse trend. Okay, so this is clearly a retracement. But before the market did anything else, it moved 46 bars down. So not only do you include the gap, you include the gap right here, okay? And you include the 46 move down, okay? But right now, you've gotten a cross. We're not looking to trade this cross because the market's gap down. It's shown us that it wants to go lower, okay? So let's look for only sell signals. Almost got one there. Got a little bit of structure playing around right here. Okay, bam. We got a sell signal right here. It does have some structure here. Let's check out what the daily move has been. 47 points. So it's moved about half the daily move. 33 if you count this here. So we got about 103 or 98. So we got about a third of that. Okay, we're going to take this sell signal right here. Short position. We're going to take it on the very next candle. We're going to make it 22 points because that's the average move. And we're going to just try to go for a 1.5 to 1. Okay. We're going to try to get 33 points for 22 point stop. Let's go. All right. So this one is a profitable one here. So plus 33 points. Thank God we can add some to the winning side now, right? So plus 33 points. Okay. And how much of the day's range have we moved? How much of the range have we moved? Let's check it out. Okay. 68 points. So we can expect, if this is going to continue, how much more can we expect out of this day? Okay. How much more can we expect? Well, if it moves on average 98 points and we're already 68 points in, not much, right? About another 30 points. So maybe you take another sell signal, but maybe it's for a scalp. Maybe it's for a 10-point scalp. Let's see if we get another sell signal and we can scalp it. So let's do short position here. 22 points. For my scalps, I'm going to use a little bit less. I don't want it. I'm going to use 11 points. I don't want it to coming back and taking more than I wanted to take from me. So we're going to use 11 points. A 1-to-1, 11 points. Okay. And we're going to put it up on this structure level here. Okay. We don't think it should be able to get back above here. All right. And our stop is right here above this. Well, right at this high. Let's play this out, see if it lets us in. Okay. So we're in that trade. Okay. And we're able to get off another scalp on that trade. All right. So that's another 11.5 points. I'm not going to add that. I'm not going to count that as a trade. Yeah, I am. Yeah, I'll count it as a trade. We'll do 11.5. I was going to say because it's the same day, but that's fine. Okay, so we're approaching the end of this day. Let's look at the average range this has moved from open to close so far. About 78 points from open to close, 77. But this is still a huge day because we had a big gap down. So if you count the gap and this, you're about 113 points. So you're way past your average move. Okay. But that also means you have momentum going into the next day. Okay. You have momentum going into the next day. And you have a lot of overhead resistance. Has it closed this gap from back here yet? Where is this gap at? Yeah, close that gap. Gap down over that gap. So it's double gap now. You see that? Close it a little bit here. So if it closes a little bit here, you got half of this gap right here. And never trade it back up into it. So you still got a gap above. Be aware of it. Don't let it influence your trading too much. Just be aware of it. But let's let this day play out. You see it continue to sell down. And then at the end of the day, kind of reversed. Okay, next day. It's a new day. Put that here. We won that. New day. Small gap up. And this day will probably be the end of the video. Small gap up here. Okay. But it's weak on this gap up. Okay, it's a little bit weak. Let's see how far it pushes into the other direction before it wants to reverse. Let's put in some levels here that we're looking at to take out. Before it couldn't take out this level, might be stopping here now. And then you know you have this one up here full of nice, juicy resistance for you. Okay, So let's see what it can do. Okay, so immediately pulled away. So what's my opening move? Is it this or is it this? Okay, so check this out. If we take this from here to here, this move down here, about 19 points. Okay, but then we take this move up here, about 13 points. So this looks more like it's going to turn into a balanced day. Okay, it doesn't look like it's going to be a trending day. It looks like it's going to be a balanced day. I can't really take any trades right now because I don't really have a strong bias. But the fact that it is below all of this still, and we've been in we had a big down day, makes me more bearish than bullish, but we need more information. Okay, so we don't know which one of these signals to take on the MACD yet. So let's hold off and get some more information. Okay, so now I'm thinking if it breaks this low, if it breaks this low right here, I'm looking to go short. Trying to get short on the retest. Maybe it'll come down and do one of these and I can get short. Okay. But I'm also trying to figure out what the range is now. The opening range, it's really tricky. It's consolidation. You're not going to get a good opening range read off of this. Next show of strength by the bears would be breaking this low though and closing below it. Okay, we stopped at it. Coming back up, getting a bullish signal to come back up. Okay, we came back up to this level here, the structure here. It was support a bunch of times and they broke it, came back up, looking like it's acting as resistance now. So let's see if on this second test we can break below here. Okay, we broke below here. At the same time we broke below here, we're getting a bearish signal. All right, so I'm looking to get some consolidation around this line. I'm looking to get this to consolidate a little bit, and then I'm looking to go for a short. How much of the daily range has been made though? About a third of the range again. Okay, down, down, down. I'm looking to get in on a retest of this line here. Okay, so we got a retest, really strong retest of this line. Let's see if it'll give me a sell signal. It's not giving me a sell signal right now, but we know that this is more of a bearish day than a bullish day right now. So we broke this line, we retested it, and these people are still selling here. So I'm going to go ahead and take a short position. I'm going to take it right here at the end of this candle. I'm going to put my stop 22 points away. Okay, the average of 22 away. All right. And how much of the range have we made today? Let's see. We started here. Come on. We've made about 50 points of the range there and about 36 there. So about a third again. Let's see if there's anything down here we want to target. Any lows down here. There is a low right here we could potentially target. Let's see how far it is away. Okay, that's reasonable. That's actually perfect. We're going to target this low. We're going to do a 1.5 and target this low. We're going to try to get in at the close of this candle right here. 22 points up is our stop, and we're going to target that low. Let's see if we win this. Oh, we almost did. Let's see. No, we almost did. We almost made it. This signal here occurred though. So theoretically we would have been out here. Okay? But it still hasn't hit our stop yet. Here's the thing though. If I'm taking this trade right here and I'm in 27 points profit, do you really think that I'm going to lose 27 points or have I moved to break even by now? Most likely I've moved to break even. I'm just thinking about real world trading. I've seen the signal here. Okay. I've seen us decline to take this low out. I'm not letting this come all the way back up here and take me out. Okay. So I would err on the side of saying that this is a break even trade because we didn't hit our target. Or maybe I made a little profit, but I don't want to like say, oh, I would have got out here. But honestly, if I were trading this for real, I would have gotten out right here. Would have had to show me it could get above here. So maybe I would have made 6 points. Okay. But honestly, if I'm in 28 points of profit, there's no way in hell I'm letting it come back and take 22 points from me. There's no way. Okay. But let's keep it, let's play it out here. Undo, undo. Let's play it out, see what happens. And end of the day. Okay. So end of the day, yeah, break even. So even if it did come up and try to stop us out, break even. This would have never happened to me though. This no way this would have happened to me. We would have got out either here on this break or we would have got out here on this break because you're showing me that you can remount these levels. You show me you can remount these levels, I'm out of the trade. I'm not interested in it. All right. So we're gonna just call this 0, which is pretty fair because you're gonna have some break evens if you're managing your trades right. So we're gonna call this a 0 break even. Do we have to take one more? Let's do one more. We got 4 wins, 4 losses, 1 break even. Let's do one more. Okay. Next day, gaps down. Another gap here. Where does it gap to? It gaps to this level right here that it didn't want to take out before. Okay, didn't want to take this level out before. Gap down to it. Let's see if it can break it. Okay, kind of broke it. Definitely broke it there. Still haven't really seen any real retracement though. Okay, this is the first real retracement. So this would be our opening range. Come on. This would be our opening range right here. 32 points. Okay, that's about average. A little bit more than average. It's the most that it's opened up in the range. So let's think about that. We have a gap here. We have a gap here. Okay. It gapped down and then it moved more. It moved the most that it's moved from our look back period of 10 days. Okay. Now keep in mind, these numbers are a little bit rusty now because we've been using them now since the 3rd. Okay. So if you're updating this every day, if you're adding the previous day, you're getting a more assessment of it. And because we've had so many gaps, had a gap here, we've had a gap here, we had a gap here. So as soon as we started trading it, we had a gap. Okay, so because we've had so many gaps, these numbers might be a little bit off. Okay, but we're just using them so we don't have to recalculate them every day. But if you're trading, I'd recalculate this every day. I'd add the opening range of the day before because you want to know if volatility is increasing or decreasing on the open because that's going to influence what your stop should be. That probably could have helped us. That probably could have helped us back here when we got stopped out by a tick right here. Remember that? Had we updated the range for this volatility here, this big gap up? Because this day, give you an example, this day here, the total range of this day was 112 points. Okay, actually more because it ended here. 122 points. Okay, so if we average that in, if we make the last one fall off and put that in, we've got more of an ATR going into this day because it gapped up so strong. Okay, that these averages are no longer as reliable as they were. All right, so just think about that when you're trading. I'm not making excuses, but think about it. It makes sense. I wouldn't take a 10-day average and then use it for the next 20 days. Okay, I'd take a rolling 10-day average and it would keep updating as more information was becoming available. All right, so what we have here for our last trade, we have a gap down. Okay, we have a gap down and we have 32 points. Okay. From the gap, we're already about half our daily move. Okay. I'm expecting this to remain bearish if we reject this right here. Okay. We already have a bearish signal here or a bullish signal here. We're not going to take that because it's below this, and it's gap down. Let's continue. Okay. So we're pulling away from this. Still bullish on the signal though. See if we can get it to go bearish again. Okay, pulling back up to the open. Is it going to fill this gap? We don't know. We're just watching, waiting on a bearish signal. And we have one right. Oh, nope, tricked us. Never got it. Okay, so we never got a bearish signal, and now we've taken out the high. Okay, we've taken out the high. So maybe we're coming to fill this gap. Let's see. Okay, this is a bearish signal right here. It kind of crossed and then crossed back. Let's see what happens here. So, okay, for this instance, I'm looking for it to break below here before I'm entering. Because it could very well break this and come up here and break this. And if it does that, we're looking for a retest of this level here, and then we'll get into a long trade. But let's look at the MACD. It's crossing. Okay, so it's crossing down up here, and we've just rejected this high right here. Okay, so I want to see it get below this right here, and then I'll go short. If it doesn't get below this and just bounces off, I'll go long. But let's look at the daily range again. What has it produced for us in the daily range? It opened here, and now we are up here. It's about a third of the range has been completed. Okay, so if this is going to be a range day, it's going to come back down here about that much. If it's going to be a trend day, it's going to bounce here and continue to go up by about that much. And we're nearing about the halfway point of the day. Let's see what happens. Okay, we're showing a lot of momentum to the downside, but we're also showing very small, tiny candles here. And we didn't close below this. We did wick it, but we didn't close below it. So these people are supporting the price. I'm still not believing in this sell signal here, and the market has rallied. Okay, but let's continue. Okay, so now I want to buy. I want to be a buyer now. Let's go with long position. I'm not even going to wait. I'm going to put in a long position right here. And I'm going to set this for 22 points, the average of 22 points. We got several things down here working in our favor. We have this level right here that it shouldn't want to come through, this level here, and this level here. We've moved about a third of the range up here. Let's check it out again and see where we are. Right now, we're about 14 bars, so we definitely have room to go back up. We have now filled the gap also, okay? So now we're targeting above these highs, guys. Targeting above old highs. So I'm going to pick an old high, and we're going to target that. Let's go 1.5. Okay, let's target that old high. All right. We're going against the MACD. We've already lost a trade doing that, but we're just trying to use a little common sense, okay? It's shown us that this bearish momentum, gap down, very strong, but then they lost the ball, okay? And now they're continuing to lose the ball, okay? Let's continue here. Almost there. Got a bearish signal on the MACD now. Oh, shit. Okay, so this took us clean out. We got up to about 33 points. Once again, though, do you really think that I'm taking 27 points in the right direction and then taking 37 or 22 points in the wrong direction? Absolutely not. Absolutely not. I'm getting out of this trade. If it's giving me this much, and it comes back down, I'm getting out at structure somewhere here. I'm getting out on their last show of strength. Honestly. Okay. Once it came down here, went back up, got rejected again, I'm not sticking around for this. Okay. So maybe we got 9.5 points out of it. Let's not give ourselves any credit, though. Let's just not take away from it, because there's no way I get all of this and then I take this. No way. All right. So it happened to be a range day. came up, came down, stayed in the same range. And at the end of the day, right there. So exact same range. You guys see that? Stopped at the exact same spot that it did before. Range day. So let's go back here and we'll end this video. We'll total it up. Got 0 again. Bring out the handy dandy calculator. So we got plus 22, plus 21, plus 33, plus 11.5, minus 11.75, minus 21, minus 22, minus 22. So net, we're up 10 points. Okay. For all that trading, we're up 10 points. So we've taken 10 trades and we're up 10 points. 10.75. Okay. We had 4 winners, 4 losers, 2 break evens. Now, 10 points over 10 trades. Multiply that by 100 trades. Or multiply that by 10 for 100 trades. 100 trades, you'd have 100 points. Multiply that by 10 over 1,000 trades. So multiply it by 100. You've taken 1,000 trades now. Now you have 1,000 points. 10,000 trades. Okay, I know you're thinking, oh my God, 10,000 trades, Jay, really? Yeah, 10,000 trades. Okay, you have 10,000 points. Now, this is points now. And what's the micro? What's the point value of the micro? $5. You got $500 for this. Not $500. You got $50 for this. $500 for this. And $5,000 for this. Okay. As your trading stake grows, though, these numbers grow with it. And you can see this is not the best strategy. I just wanted to show you how, if you were looking for something to take a signal from, how just using the average movement of the stock is going to give you a good indication of how much more is left to go in the move, okay, and how much more, how much you can expect to get out of the move. Let's look at this from high to low. High to low, we did about 73 points, and that's pretty much the range. So this was a below average day right here because it moved less than the average 98 points that it does. So below average range day. What will we guess the next day is going to be? Let's just guess. Before this day opens here, which it just did, it's opening down. But what would you guess this day is going to be? You had a range day that tested the highs and fell away. What do you think we're more likely to do? Test the highs again, okay, which we've done here and here and here, or test the lows? I think we're going to test the lows. So I'm looking for sell signals right off the bat on this day. So this trade ain't going to count for anything, but let's just see what we get here. We got our opening range down. Opening range down 23 points. Okay, that's about average, showing us the bears are about average strength here. But then the bulls took over big time. Boom, pushed back up above the high. What do you think they're coming for? Coming for this low, coming for the people resting above this low, and right here. Okay, so let's see what we get out of this. See if I can get a successful trade off. So 2 things now. This low here is holding, it looks like, but they're not selling as much as they did before. So we're looking for a pullback now. If we get a pullback to around this level here, and I'm getting a buy signal on this, I'm looking to buy. Okay, we're getting a sell signal on this right here. This is a little tricky because we've now tried to get up here twice. We've tried to get up here twice. We were bearish from the open, okay? And we tried to get up here twice. So now I'm a little confused. We do have a bear signal here, though, a sell signal right here, okay? I'm going to take this sell signal. I'm going to take it. This will be the last trade, and I'll cut the video. Let's go. Do me right. Do it for the vine. Let's just go logically. Is there anything down here? There's nothing really down here to take out but these lows. Equal lows here. Okay. Let's shoot for it. Let's go. 22-point stop. Okay, let's look at this here. Still got this holding, lower low, lower low. Hasn't given us any significant profit, so we would be taking this stop. Okay, we've just taken out these two lows right here. That's pretty significant. Testing them. Looks like they're holding. Okay. It's like these lows or these highs are holding right here. Got another one there, another one there, and profit a little bit. Okay, breaking above all this, I don't like that at all. Let's look at this. And we'd be taking this stop because we don't have anything else to do. Got another sell signal here on the MACD. You guys see that? So it crossed here, telling us to get out long, get out short. It crossed here, telling us to get out short. We ignored them because of structure. Hasn't broken up through here yet. Breaking down, we want to see this structure break. Okay, nice break there. The day is ended. If we just take it for the end of the day, we've made this much. Let's hold it through the night. Let's have some fun, guys. Let's hold it through the night, and let's think that it's going to gap down. Let's think it's going to gap down somewhere in here. Oh, look at that. Oh, wasn't that great? I didn't know that was going to happen, guys. Look at that. So you let it gap down. You got an option or something like that, or you just held the micro through the night, put your stop up here, let it open and do what it was going to do. Look at that crazy gap down there. All right, guys. I hope you enjoyed it. Leave some comments, leave some feedback. Um, if you like videos like these, let me know. They take a lot of explaining because I just do this stuff naturally, but I wanted to give you kind of like a way to think about it, going back, looking at average ranges, and then just taking signals off of this and what signals to ignore. If you try this, try adding a 200 period moving average or a 50 or 100, one of the big moving averages, and only take signals in that direction. Okay. I'm thinking of trying it with Bollinger Band, but it didn't really matter the strategy that I put in. What we wanted to do, though, was get out, use an average true range of what price can do, okay? So that we're not going 30 and a 60 and wondering why everyone's honking at us. All right. Talk to you guys later. Peace.